Attention traders, brace yourself for an exhilarating journey into the world of Forex as we kick off a fresh trading month, with all eyes eagerly awaiting the release of influential NFP report. We are here to provide you with an exclusive sneak peek into the upcoming market dynamics. Get ready to uncover hidden treasures and gain a competitive edge in our power-packed Forex weekly forecast. So let's dive directly into the charts. And this week, I'm not starting with dollar index because as per the technical chart setup, it's still a mixed bag. So we do not have much clarity on the direction of dollar. So I'm beginning my analysis from EURCAD. So right now, I am on 4-hourly chart and I'll be switching to weekly here. I'll just clean up my chart, and based on the weekly time frame, I'll turn it into a line chart. So here we go, and if you notice, we have bullish divergence at the bottom. We got the breakup structure and the market has completed its bullish cycle. So starting from the low, moving to the top, and it also created a double top here with bearish divergence. So we can use bearish divergence and we can use this complete cycle starting from the bullish divergence to bearish divergence. So I'll mark Fibonacci here on the candles chart. So starting from the lowest point and taking to the high. So the expectation is after completing this bullish wave, now we may get ABC corrective pattern. So A, B and C, which may take it back to 50% retracement area. Now I'll plot Fib extension to understand the downside target. So starting from the highest level, moving down to the first low and connecting to the lower high. Now here, the first target is at least 61.8 followed by 100%. So let's mark 61.8 as the first potential target. So we have marked our first potential target in the downward direction. Now moving back to daily. Now here, if you notice, coming back to the line chart, we had weakness. We got the divergence here, which formed higher high with weakness coming back. So we are expecting a move back to the same area, retest, and then continuation in the upward direction, or maybe a deeper retest or deeper correction and then continuation to the upside. So right now MACD is bearish on daily time frame, and we also have we do not have any signs against towards this bearish move at the moment on the daily time frame. Moving to 4-hourly chart. Now based on 4-hourly time frame, the beginning of bullish cycle is from the bullish divergence at the bottom, and the end of bullish cycle is on the higher high formation with bearish divergence. So we got lower high. So it was in a triangular formation in the previous week, and now it has broken to the downside. We can have the retest and then continuation to the downside. So this is the projection in the downward direction. Now I'll quickly apply Fib extension one more time, starting from the double top, connecting to the first low and higher low. So currently it has reached to Fib extension of 1.272, and I do not see any signs against the bearish move. So we have lower low formation, So no bullish divergence coming into play, which means the market remains in the grip of sellers here. Now moving to 1-hourly chart. the expectation is, now we are getting some bearish hidden formation here, which means continuation to the downside, and usually the extension target is 1.618. so my expectation here is that it will continue to at least 1.618. It will complete its journey to 1.618 with bullish divergence. So for the short run, we may find pullback towards 61.8 and then continuation to the desired target. So in the coming week, I'll be waiting for this bullish divergence formation on the lower time frame, and I will allow it to run back to 61.8, and this is the area to get into the sell trade. So if you get a pullback towards this area, that is 1.4667, which is also 1.618, which is also 61.8 fib extension level, then I'll be entering into my short trade somewhere here with stop loss above the first lower high, and the downside target will be at least 200%, so 1.4500. We'll be easily making 1 to 2 risk and reward. So this is the plan for EURCAD for the upcoming week. Now the next currency pair is pound New Zealand, starting from the higher time frame. This currency pair looks bullish on all time frames. So here is the long-term chart, that's weekly, and based on weekly chart, if you notice, we have low followed by next low, and it is a lower low formation on weekly price chart, and we also have lower low formation on MACD lines. We also have lower low formation on MACD histogram, which means that the bearish trend is not yet over, but we are into the corrective pattern of this bearish cycle. So here I'm expecting a pullback. So this is the bearish cycle which we have identified on the weekly time frame, and I'm expecting the pullback here. So we will use fib retracement on the bearish cycle we have identified, and I'm going to start from this high to the lowest visible point. Now in this corrective pattern, the first up cycle is here. So this is your first bullish run, corrective pattern, and now we are in the second bullish run. So usually the corrective pattern is in 3 waves. So we have A, B, and now we are expecting C, which may take it to 61.8 retracement area of the previous bearish cycle. So I'm going to use fib extension in the upward direction now, and I'll be using from the lowest point to the first leg, that is A, and I'll bring it down to B. So the 100% extension area is at 2.315, which is way higher than 61.8, and the next major resistance is around this area. So we are very close to the major resistance point, and we are also forming a new 5-leg bullish structure. So first wave up, second down, followed by the longest third wave, fourth wave down, and now it is going to complete the 5th bullish wave. And based on MACD, we do not have any signs against. Everything looks bullish for pound New Zealand. Strong bullish momentum on MACD. So I'll be using a different color, but I'll mark the new 5-leg structure here on fib extension to understand the next upcoming target. So we'll just change the color here to blue, and I'll use another extension line here, fib extension, with a different color again, maybe red. So I just need to understand the magnet zones based on different extension levels plotted. So here the first major confluence is coming at 2.17, and the golden line is the Fib retracement line, which is at 2.20, and the exact magnetic zone is around 2.28 to 2.30. So in the longer, right now we are at 2.10. So in the longer run, pound New Zealand is expected to touch at least 2.28 to 2.30, and the first target would be 2.20. So this is the plan based on weekly chart. Now I'll move back to the lower time frame, that is daily chart. And based on daily time frame, I can see that we had bullish divergence, lower low formation with bullish divergence, and we have already cleared the BOS level. So BOS level being cleared, and now we can expect a pullback and then continuation to the next level of 2.16. So currently I can see that histogram has started slowing down, but MACD lines is still bullish. So we can expect a short-term pullback, only short-term, and then we should plan to buy the dips for the next target at 2.16 followed by 2.20, derived from the higher time frame. Now moving to 4RD chart. Now based on 4RD chart, I can see some slowdown in the bullish momentum. I'll turn it back to the line chart. So based on 4RD chart, I have noticed higher high formation with lower high being completed on MACD lines and even on MACD histogram, which means that we may find short-term weakness in the buyers, so which will create a pullback. So here this is the rising trend line. Until this rising trend line is breached, the plan remains bullish. So I'm expecting short-term bearish price action and then continuation to the higher level. So pound New Zealand should be bought on the dip, especially this is the area to get into the buy trades, 2.07 to 2.08, retest of the rising trend line and continuation in the upward direction. And next currency pair is New Zealand CAD, starting from the higher time frame. Now here, based on the higher time frame, I'm talking about weekly here. So based on the higher time frame, if you notice, we had bullish divergence in the past. It created the BOS, but it did not break above the previous high. So this remains the ultimate resistance level, and the downward cycle started from this point. So this is the beginning of new downward cycle on the weekly time frame. Here, this one. Now we have the structure of the bearish market here. So we have a high, lower high, lower high, lower high, lower high, equal highs, and now it has broken this level as well. So it is creating a new lower low. So I'm going to plot Fib extension in the downward direction. I'll be starting from the highest point, connecting to the first low and the lower high. So the first extension area in the downward direction is Fib extension 61.8 here, which is also the confluence of the retracement point, Fib retracement. So here it is going to confluence with Fib retracement 80% area of the previous massive bullish move. So this is the expectation in the longer run. Now moving down to the lower time frame, everything looks bearish even on the lower time frame. Right now the price is exactly sitting on 61.8% retracement area of the previous bullish leg. So our new bearish trend on the daily time frame starts from this level, the lower high formation coming from the weekly chart. So I'm going to apply a new Fib extension in the downward direction from this level. which will give us the idea of the downside target. Starting from the lower high, connecting to the low, and the new lower high formed on daily chart. I just need to change the color of the fib extension. So right now we have crossed 100% mark, and the next target is 1.618. so currently we are at an important support price with a mild slowdown in the bearish momentum. So I'm expecting pullback towards 61.8 and then continuation towards 1.618. So the next target in sight is 0.7947, or we can also say round number 0.7950. This is the area to be targeted in the downward direction. Now moving to 4-hourly chart. Now based on 4-hourly time frame, if you notice, we have the first leg to the downside, second corrective leg, and now we are in the third wave, which is usually the longest wave. I can also see some slowdown being formed on MACD lines as well as histogram, which may send this currency pair back to the previous web levels. You can use a new falling trend line here, retest the falling trend line, and then continuation to the downside. So only in the short run we can expect some bullish behavior, that is due to corrective pattern, but ultimately it is going to move in the downward direction, and the target is 0.7950. so I'll be entering into the sell trade after the pullback somewhere around 0.8200. we can use the falling trend line connecting the high and the lower high, and we can use stop loss above falling trend line, and the target should be 0.7950 here. So if we catch this trend in the downward direction after the pullback on the lower time frame from this area, and stop loss should be above the falling trend line, so we can also increase the stop loss a bit here, so we can again make the risk and reward of 1:2.5. so by risking 1%, you'll be aiming to get around 2.5%. so this is the plan for New Zealand CAD. Now, apart from currency pairs, we have interesting opportunity in oil. So technically nothing has changed in the oil's bullish setup. So I'm starting from weekly again. I've explained in my previous video as well that after creating this higher high formation post-COVID, this is the post-COVID low, in fact COVID era low, and this is post-COVID era high. So I'm going to mark fib retracement here. I'll start from the lowest to the highest. Market retraced back, this currency pair and this instrument retraced back towards 50%, and now it's rising again, and this rise is again expected in ABC pattern. So we have completed A and B. Right now it's forming C. So I'll be applying fib extension on ABC pattern. So fib extension starting from the lowest point after corrective wave, and here we go. So we can expect the first target to be at 61.8 extension level. So here is the first target for crude oil, that is around 85-86, and the next target could be, if it continues in the bullish direction, the next target could be fib extension 100% area, that is around 98.63 in the longer run. So we have derived the bullish target from weekly chart. Now moving back to daily. Now if you look at the behavior of daily chart as per the market price action, the structure is bullish. So we got lower low formation with bullish divergence, and since then it is creating high, higher high, higher high, higher high, higher low and higher low, higher low and higher lows. And I do not see any signs against as of now. The price is clearly rising, and we have the rise on MACD lines and histogram as well. So nothing to worry for the crude oil bulls, and I'm going to plot fib extension on daily time frame as well, starting from the lowest point, connecting to the first high and higher low. And the next target is the confluence coming from the higher time frame fib extension line, and now plotted on daily chart. So the 200% extension is coming to the same level, 86.24, and if it continues, then the next extension will be 2.618, 91.5, followed by 94.75, and finally 98.75. But no signs against in the bullish direction right now against the bulls. Now moving to 4H, if you notice, we got the massive push to the upside, retracement, and now again with bullish divergence with double bottom at this level and continuing to the upside. So if you want to get into the bullish trade, the next target is at 86 or 86 and a half, and the stop loss should be below 80. So let's say if we get into the trade at the current market price, this should be my stop loss below 80 at 79.5, and the next upcoming target is 86. So the risk and reward is just 1-to-1, and we can also apply the rising trend line here. So based on rising trend line, the first invalidation would be the break below the rising trend line. So in case if we get the pullback in this bullish move, then the ultimate invalidation would be the break below this rising trend line coming from the daily chart, and the next rising trend line is starting from this level and connecting to the next higher low. So the short-term invalidation in the bullish plan would be the break below the second trend line, the steeper trend line. So here we got the retest, we got the pullback towards the trend line, and now it is moving towards the fib extension 200%. So plan for crude oil is to buy on the dips until it breaks the first trend line and finally the second rising trend line. And ultimately we are going to talk about gold. Now gold remains ultra bullish on multiple time frames, starting from monthly, in fact 3 monthly, weekly, daily, on all time frames. Gold remains ultra bullish. Now again I need to clean up my chart, and based on the weekly chart and plotting fib extension on the historical low of 2015, I have done it multiple times in my previous videos. I'm going to mark it again, starting from the lowest point, connecting to the first high and the higher low. So right now we have crossed extension level of 2100, and the next target in sight is 3.618, which is 2309. So in round number we can say that gold is marching towards the price level of $2,300 per ounce, and I do not see any slowdown on the monthly chart. MACD histogram, MACD lines, they are clearly rising without any sign of slowdown. Now this was the first extension marked. Now I'm going to connect the second major extension on the second bullish run. So here I have connected again the second fib extension in the bullish direction, and we can use a different color here. So it has already crossed the 61.8 fib extension of the second bullish cycle. So it has just broken in the bullish direction the round number of 2200 price bar. Now if we connect the rising trend line, then the invalidation in the bullish plan would be the break below this rising trend line. Right now I do not see any signs against or the break coming up of this rising trend line. Now moving to daily chart. Now based on daily time frame, I need to apply fib extension on the latest daily bullish cycle. So I'll start from this low, connecting to the first cycle end in the bullish direction and higher low formation. I'll use a different color now, a dark brown color here, to understand the next extension level. So the next extension level in sight is 2275, plotted on the bullish cycle of the daily time frame. So 2275 to 2300 is the next target, and we got the duplication of two fib lines at 2098 to 2100. So we are not getting an opportunity of the pullback. If you get an opportunity, grab it with both hands and target 2275 or 2300. And the invalidation would be the close below 2100 level, so which is way too far from the current price. Now I need to move down to the lower time frame. Nothing against the buyers. Even on 4-hourly chart, you can see MACD lines, both MACD lines, they are clearly rising, and MACD histogram is also rising. So I'm going to use the current level on the lower time frame, which should act as invalidation in case we get a break below this level. Now here I'm going to use another rising trend line on the lower time frame, and I'm going to plot the next fib extension on 4-hourly time frame. Now here we go, we have a massive support around 2135, which was never retested. Then the next major support comes at 2150. 2135 to 2150 is the major support area. In case if we get an opportunity, which I don't think so because it has already crossed the rising trend line on the upper side as well. So 2201 means 2200 should be taken as the opportunity to buy in case if you get it. Otherwise, just keep buying in the small quantity at the given price, and you can keep adding whenever you get a dip on the lower time frame and you expect it to reach 2275 to 2300. So gold remains ultra bullish across all time frames. So this is the plan for upcoming week. I hope my technical analysis adds some value to your trading plan, and have a profitable trading week ahead. Bye bye.